Bitcoin is an asset, it's not going away. I used to say, if it's not going to zero, it's going to a million.
In the world of cryptocurrency, few voices resonate as profoundly as Michael Saylor's. With a track record of foresight and an uncanny ability to decipher market trends, Saylor has become a beacon for those navigating the complexities of digital assets. In a recent video, Saylor shared insights that shed light on the trajectory of Bitcoin, its evolution from a speculative asset to a digital property, and the seismic shift it's catalyzing in the financial landscape. Saylor's narrative begins with a reflection on the past 18 months, a period marked by skepticism and volatility within the crypto market. However, he underscores a pivotal moment that occurred around January when the SEC greenlit several Bitcoin ETFs. This regulatory stamp of approval signaled a paradigm shift, propelling Bitcoin into the realm of recognized assets and igniting a frenzy of institutional interest. Central to Saylor's discourse is the redefinition of Bitcoin as digital property, rather than merely a cryptocurrency. This distinction, he argues, positions Bitcoin as a store of value akin to gold, enticing investors to embrace it for its intrinsic qualities rather than speculative gains. Saylor's analogy draws parallels between Bitcoin's ascent and the emergence of other universally valued assets, highlighting its potential to redefine wealth preservation in the digital age.
It's hard for anybody else to look at this because 18 months ago, Bitcoin was 16,000 and everybody thought the crypto economy was going to zero. So it's only really been in the past 6 months. You could even argue 12 weeks. It's really January when the SEC approved the spot ETF that the mainstream consensus in the world was Bitcoin is an asset, it's not going away. I used to say, if it's not going to zero, it's going to a million. But there are a lot of people thinking, oh, it's too good to be true. The government will take away from you. It'll be banned. And I think turning the corner was really essential. And the turning of the corner is when people realize it's not a cryptocurrency, it's a digital property. And if it's a digital property, it's a store of value. And I'm going to buy it as a store of value or buy it through the ETF and hold it a long time. And when the SEC approved 10 Bitcoin ETFs, mainstream Wall Street consensus shifted to, okay, it's going to be around. And it opened up an avalanche of enthusiasm. And that kicked us into this Bitcoin gold rush era. For the next 10 years, every quarter, there'll be more enthusiasm, more adoption, more awareness. But it's like year one of Bitcoin as an institutional asset. Companies will do this, but it's hard for them to move that fast. Normally, if something is new for the last 3 years and you're in the 4th year, you're an early adopter. So that's how fast corporations move. So I think it does happen, but I think that we're still very close to the crypto winter. So many bankruptcies, so many meltdowns. We need to get a little bit of distance from that and stabilize. And at that point, more conservative companies will start to move into the space. If you create a bank based upon cryptography, based upon computer science, and you give a copy of that software to everybody in the world that wants to use it, and then everybody voluntarily buys and sells those units we call Bitcoin and holds them if they wish to hold them. And anybody that tries to cheat the system gets kicked off the network. So Bitcoin is better thought of as a protocol, a fair, equitable protocol for people to trade economic value or store economic value. And it happens that the more people that use the protocol, the more valuable it becomes. Not so different than English, the language. The more people speak English and the more money the people that speak English have, the more useful it is for you to learn English. And like New York City, the more people that move to New York City with more money doing more things, the more valuable your real estate is in New York City. So it's basically a network. It's the world's greatest monetary network, a digital monetary network. And what's special about it is it's open, permissionless. Nobody owns it. No country controls it. No company controls it. No individual controls it. It is the result of an experiment where the 50 predecessors all failed and thousands of copies failed. And it's the winner in this Darwinian market economy for money. And what you have is a network where hundreds of millions of smart people with money have entrusted hundreds of billions, now $1 trillion or more of money to the network because it's a much more efficient way to do things. And that being the case, it's just the world's first scientifically rational engineering protocol for economics, for economic cooperation,
Yes.
or for monetary interchange. And that's something everybody needs. Nobody can stop, but most people don't understand. And the reason that it makes sense to spend 100 hours studying it right now, and the reason it makes sense to buy Bitcoin is all of my best investment ideas are things nobody could stop, everybody needs, and nobody understands.
Saylor delves into the fundamental underpinnings of Bitcoin, likening it to a protocol for economic exchange built on principles of fairness and decentralization. He elucidates how Bitcoin's value derives from its network effect, where increased adoption amplifies its utility and resilience. Drawing parallels to linguistic and urban networks, Saylor underscores Bitcoin's status as the preeminent monetary network, impervious to geopolitical whims or corporate influence. At the heart of Saylor's thesis lies Bitcoin's scarcity, an attribute he posits as unparalleled in the realm of commodities. Unlike traditional currencies or assets subject to inflationary pressures, Bitcoin's fixed supply of 21 million coins imbues it with unparalleled store of value potential. Saylor's comparison to commodities with fluctuating supplies underscores Bitcoin's unique proposition as an immutable asset immune to debasement. Saylor challenges conventional economic wisdom by advocating for zero inflation as the ultimate marker of value preservation. He elucidates how Bitcoin's zero inflation model transcends the limitations of traditional assets, offering a perpetually enduring store of wealth. Through a thought-provoking analogy, Saylor juxtaposes assets with finite lifespans against those with timeless durability, underscoring the profound implications of scarcity on economic resilience.
It's the first time in human history that we created a commodity with a hard supply. Every money in history, glass beads and bales of tobacco and stone coins and copper tokens and paper currency and cigarettes and fiat currency, all of those things were uncapped. Every other commodity, soybeans and oil and natural gas and gold and silver, uncapped. We can create more of them. Land, timber, real estate. You can even extract land from the sea. You can create more of it. Bitcoin is the one commodity that you can buy and you can hold where it is absolutely capped 21 million. So if the price goes up by a factor of 100, the supply is invariant. There is no other commodity where the supply is invariant to the demand or to the price. That makes it perfect money. It makes it the best store of value asset. Most other commodities are much worse. If a commodity has a stock-to-flow ratio of 1 and you produce, twice as much, or the equivalent supply every year, it's not going to be good money. If the stock-to-flow is 50, it might be better money if you only inflate the supply by 2% a year, like gold. But it's still not great because every 30 years you cut your money in half if you inflate 2% a year. So this leap from the idea that there should be a 2% inflation rate to the idea that there should be a 0% inflation rate. That's a profound idea. Most classically trained economists and all the Keynesians would tell you 2%. 2% is the right number. We want 2% inflation. But 2% gives you a half-life of 30 years. 1%, you get to 72 years. 0%, you live forever. There's a pretty big difference between 0 and 200 basis points. One thing is you live forever, you're immortal. And the other thing is 30-year half-life, So,
Exactly.
So you don't think it's a lot, but it's profound. Do you want a building that will stand forever? Or do you want a building that will crumble in 30 years? And once you start thinking about that, you realize if you build a capital structure of a company or a family or a country on an asset that's crumbling every 30 years, your civilization's going to struggle. Gold's got a half-life of 30 years. The US dollar is inflating about 7 to 8% every year. That gives it a half-life of 10 years. Most currencies inflate at 14% a year. Gives you a half-life of 5 years.
5 years,
And then some currencies inflate and have a half-life of 18 months. And so you start and ask the question, I want to build a government. I want to build a family. I want to build a company. I want to build a nonprofit. I want to build a bank on a capital structure that will last forever, or 30 years, or 10 years, or 2 years.
Yeah.
And so that second idea of scarcity, that's a very brilliant breakthrough. The third idea that's a breakthrough is transactional scarcity, second order scarcity. The fact that there's only one block every 10 minutes, or the fact that there's only 4 megabyte blocks, or there's only 4,000 transactions, maybe 7 transactions a second. A lot of people think that's a bug. That's a feature. That's actually how you enforce security, and you create a market economy in transactions. So you won't have first order scarcity if you don't have second order scarcity. So Satoshi was smart enough to realize that you just can't move the Bitcoin around every second because the security will collapse and the stability of the network will collapse. And I think that was very brilliant.
In a nuanced exploration, Saylor delves into Bitcoin's transactional scarcity, a concept often misconstrued as a flaw. He elucidates how the deliberate limitation of transaction throughput serves as a safeguard, ensuring the network's security and stability. By balancing first-order scarcity with second-order scarcity, Bitcoin achieves equilibrium, fostering a robust ecosystem grounded in market dynamics and cryptographic integrity. Michael Saylor's narrative transcends mere analysis, offering a roadmap for understanding Bitcoin's transformative potential. Through his insights, viewers are invited to contemplate the evolution of money, scarcity, and economic cooperation in the digital age. As Bitcoin continues to ascend, Saylor's vision serves as a guiding beacon, illuminating the path toward a future defined by decentralized prosperity and enduring value.